All right. What's going on, team? How we doing today? Let's bring on my man, Nick Brown. What's up, Nick?
How much? How are you?
Starting up the day, man. A little frustrated there. I was doing so well on the day and then took a second to step away from the desk. And let's just say some stops were triggered when I was away.
Well, let's just say pre-market prep was an excellent show. I watched it, loved the 2024 outlook. We have some articles up on .com regarding Tom Gordon, Gene Munster from a few days ago. What the pre-market prep crew did, what you, Mitch, what you, Joel, and Dennis did was amazing. Kind of set our viewers up for how 2024 was going to be. Get a few stock picks, see what they were predicting. That is something that you don't see very often in such 2 hours time. You were able to get 5-6 guests on for a good 20 minutes each. So we got a lot from each of them. Hope people will go back to rewatch that because that really kind of sets the stage for how 2024 is going to look.
Yeah, it's going to be interesting. Definitely a little frustrated here. I'll share my screen in just a second here so you guys can see what happened there. And it's going up from like $300, $400 and maybe up like $500 on the day to going down slightly here is just frustrating. And it was all on that big turn right there on the Qs. And I was looking really good, but one stock I just SMCI, I had a stop on. It started going into the green. Right here when it was in like 297, I'm like, all right, well, I can walk away now. This is looking pretty good. I was down below towards the 295s and up about $2 on the name. I walk away, and when it was going up to this 297, I ended up cutting out my stop just because I was looking for it to kind of push and I didn't want to pressure it on the downside. I ended up looking at NVIDIA because it was already starting to come down, stopped looking at SMCI, and just got wrecked on that downturn there. So yeah, that's ruining my profits today because early on I had pretty good profits on NVIDIA and PayPal. I ended up taking my PayPal off also just to take some profits back and put myself not down big. But definitely a little frustrating on the day. PayPal is definitely one of the best trades that I had on. I had to cut it just because of this downturn in the Qs, and it was a quick one. It went from 411.10s to 410.20s pretty quickly there on the Qs and kind of ruining the trade today. But it is what it is, man. I don't think I'll even take too many trades after this. Maybe I'll look at some smaller names to see what happens. But I wanted to come on at least for 30 minutes for you guys out there, see what's going on in the market. I'm seeing LiDAR plays being hot as of late. Of course, LIDR kind of doing – is this a reverse split? I think it is. Let's see. They did a split here, reverse 1 to 30. So maybe this one starts to get the lift, right? AUR has been hot, but that one's struggling today. Alster has been the other one that has been hot as of late, and that one started the day off pretty decent, then pulled back. You guys can see it's just been chopping around here. We'll see if we actually get some up action in the market. I think we're getting a little bit of chop today, and if it's going to be choppy, you got to be careful because it could just be like a chop day, where it comes back and forth, back and forth, back and forth.
Well, Mitch, Apple's down once again. Apple's down again on more concerns regarding the Apple Watches. You have Tesla. We have some news regarding Tesla. There's 2 senators writing to Musk this morning after a Reuters investigation regarding the Tesla recalls. We also have news out of Bloomberg this morning, basically, or last night actually, with a revamped Model Y out of the Shanghai plant. We have Anthropic news. We have Apple, the designer chief. He's joining John Ives and Sam Altman for this new development. You know, there's a lot of news in 24 hours. Well, actually in 12 hours. And the concern is we have the Santa Claus rally. We're in this period. How do you position yourself into year end with light, thin volume of trading? Anything can turn the market around. We have the Red Sea scare still. We have WTI 74, yields 3.8. The question is, how is trading going to go for today, tomorrow, Friday? Anything can happen. Do you think S&P could go to 47.96 for an all-time closing high before year end?
It could. You never know, man. I was pushing for NVIDIA to 500 in new highs by the end of the year, and that just stopped me out right now. It could still come back, but definitely that downturn is a little bit wicked there in the Qs. So Now just stuck watching. I think that's how it's a lot of people are going to be towards the end of the year, stuck watching, not opening too many new trades. And if you are, there's definitely risk with those trades, right? I think that's the important part now, is that there's a lot of risk in the market, man. You got to be careful out there, team.
We have the New York Times suing OpenAI and Microsoft for copyright infringement. We found that out this morning, basically saying this is a big deal because, one, how courts define the value of news content and training large language models, and two, what the damages are for previous use. Does anybody, how does this go for CNBC, CBS, the FT? How do companies that partnered with AI do this? Do we see more lawsuits ahead with maybe CNBC suing OpenAI, or companies that have used the AI model get sued?
Without a doubt. I mean, let's just be honest. There is nothing that is, it's hard to be truly original anymore. Let's be honest. And with that being said, there's no article that isn't being copied. There isn't no article that isn't being rewritten. Everything that's put out nowadays is usually what? Plugged into either a chat GPT for a rewrite, or a writer is reading it and rewriting it anyways. So, I mean, at this case, I don't think the Times has a really a strong case here. The big thing that they're going to battle is that this is some kind of intellectual property. The truth is that when you write an article and you put that out, is that true intellectual property?
Well, that's what they're going to try and have to define.
The truth is that they'll have to define that they're getting some kind of information that nobody else has. And if they do have access to that, then is that even a good thing, right?
But then you have to raise the question, where's OpenAI getting all of its news source? Is it of the New York Times? Is it actually factual?
The truth is that there's a little bit of a separation there, right? And really what ends up happening here is that, I mean, if you look at the plugins nowadays, it doesn't matter what the data set is necessarily, because you can trick ChatGPT to using the web browser as its data source. And then the next thing you know, you have like plugins that are using kind of real-time information. Now, a lot of this real-time information is going to be wrong, but that doesn't matter to it. At the end of the day, if you train it to do a certain task and tell it to punch this out, it's going to punch it out, man. I think this is an interesting lawsuit. It's going to go, I think, to the point where even where the lawsuit is filed, it would not be determined at that court. I think this is one that ends up being even going maybe to the Supreme Court, Nick. I think this is going to be a big issue for the next 2 to 3 years. And it's going to take years maybe to actually determine what's going to happen here. Because let's just be honest. Are they going to stop at just OpenAI and Microsoft? No, because if you really start looking into it, there's going to be a lot of people that have pulled that information and are using it. So now what happens is, do people get access to OpenAI? Does the government get access to OpenAI's data source so they can really look into it and see what's in there? This is another part of that, right? Things that we need to be thinking about. All right, let's keep going, guys. Let's go. I'm willing to take a shot, guys. I'm a little bit annoyed being a little down today, as I was up like 300 and had like 200 in unrealized. But we can battle back, guys. The key is the market going to battle back? Because right now the market just seems like it wants to come down. And at least from my action that I'm seeing right now, I don't want to battle that, right? I don't want to be going long and then the market starts to break here towards the end of the year. Santa Claus rally is looking like, I don't know, man. Maybe we test yesterday's low. We're just hanging around. We're not really climbing. We're just slowly stair-stepping higher.
Average gains, Mitch, if you go back to Santa Claus rally, I think the average gains over a certain period of time from when we started counting this, I think is like 1.3% for the major averages. And we're kind of in that range right now. Nothing too much or too given. I think 79% of the time the market's risen during the Santa Claus rally period.
So I would look at opening price on the Qs on Friday, which was what, 409, right? So 409 was the opening price. You can pull up to see what 1.3% would be like. And 1.3% actually puts us up there towards 414.31. So that's $5.31 on the Qs, because that's what I'm focusing on the Qs here. So if you think about it in that perspective, that puts us a pretty substantial move higher at some point in the next couple of days. That's what, 2-3 points higher than we are right now off the highs. So keep that in mind. We'll see if that actually makes the Santa Claus rally run. But it's something that I'm thinking about. And that quick downturn, that wasn't something that we wanted to see there. So keep your eyes on it to see if the market comes back. I think we could have a struggling Wednesday and then maybe a really good Thursday and Friday. We'll see what happens there. For right now, I think that you're seeing a little bit of some chop. And with that being said, you got to be careful here if we start to see some downside action, especially in the bigger names. Like you see the bigger names are just getting smacked right now. Apple's down about 0.5. So I'm keeping an eye on some of the bigger boys to see what happens to those, and even watch out for Tesla. I know that Tesla was going up, but if the market keeps dragging, I feel like Tesla's going to start making a down move here. We'll see what happens on that one to see if it can continue to lift. Healthcare is doing well. That's one area that you can continue to watch to do well. Biotechs, big stocks there doing pretty decent. And then, of course, catch your small names in that space. What do you guys see out there in the market, guys? You guys see some smaller names? Anyone seeing some smaller names out there? I'm catching you guys. Walmart being mentioned in the chat. GCT. Okay. I saw earlier a couple of stocks that were showing up and kind of making a big move. Slidar showing up there. We'll see if some of these actually start making a move. Wolf. The Wolf. Hanging in there. BTBT has pulled back a certain amount. A lot of these mining stocks have really taken off here. What about stocks like that we were trading yesterday? I know there was Back Holdings. That's like going sideways. Has pulled back a good amount. I'm looking around, guys. I'm looking around to try to find some plays here. The IWM has been continuing on the uptrend, but starting to slow down on the day today. Murrah looking good here. That one's actually a pretty decent name. IBRX, but I'm not finding anything that's just making a move. ISPR, not looking too bad, but that's a smaller name. Velodyne 3D, starting to get a little bit of a lift there. I have to go back to Desktop Metals. Desktop Metals, not looking too bad there. I remember I had this at 75 cents. It's now made a run yesterday to 87. Do I want to take another shot in DM? Something to think about. I did see some DM, some companies were looking at 3D companies for buyouts, so keep that in mind. BTDR here, doing a pretty good move here. Deer Technology, I'm sure this is a crypto stock, making a nice little move. There's a nice little push there to the 1270s from the 1250s. That could maybe get the wolf going again. We'll see what happens on that one. NKGN has not been doing anything all day. Will this one wake up? We'll find out about that one. Let's see another one. I know there was another one that was moving earlier in the day. What's up out there, guys? How you doing? Mara mentioned, of course, in the chat. Good reversal in gold today. Okay. How's the BTU? Okay. Somewhat moving. Not really a big move. LiDAR. Will LiDAR make another big move here? It's battling right now between the 325s and the 350s. Qs now going red here. Making a bottoming around the 410.21 area. So that's at least not looking too bad if it can hold that. But if we go through 410s, watch out. We could see some more downside action come in. And technology, stay red. What's in the green today? Basic materials. Coal doing pretty decent. Silver. And coal, I like also Met. Met's been the best one. And I talked about that one recently. And it's really started to get going in the last 3 days. So I'm going to be looking for pullbacks on that one below 18. But METC looking pretty good in that space. It's coal. SKC also has been on the liftoff. So keep your eyes on that. BTU, one way to play that in the intraday action. But still so slow. Not moving as fast as some of the other ones.
Mitch, there's from the Dallas Fed Services survey. Here's a good quote, and this is from Forex Live pointed this out. Ain't this the U.S. in a nutshell? For rental and leasing services, the Dallas Fed Services survey says we think the geopolitical situation and America's status is in it so much worse than 3 years ago. Besides that, we think we have a strong economy through the first quarter of 2024. That kind of sets the stage because, well, the Fed, of course, I think it's Goldman. They think, I believe, 5 rate cuts next year.
Yeah, I think that's insane.
I think 25 starting in May, June, maybe even earlier.
I mean, I'm going to go on the line saying, yeah, I definitely don't think that's going to happen. Will I want it to happen? Even I want it to happen because I'm down to buy a house. But at the same time, it just makes no sense for them to cut that much. No sense.
Better call Jay Powell up.
There's no reason why that even should be in the mentality of the Fed. Yet.
What do you define the Fed's job is? To get inflation down or to maintain a healthy economy?
So I see the first initiative should be inflation, but the truth is that they've moved on past inflation before it got to 2%. And if you remember the wording from the Fed itself, what was the wording that was said multiple times in like multiple meetings, not one? We're talking 4 or 5 meetings last year. What was it? It was that we were going to get it to 2%, and then we needed it to be what? Sustained at that 2%. Did we get to 2%? No.
No.
Did we get to 2% sustained? No. Yet did the Fed pivot? Yes.
Yes.
And so that right there just shows you the credibility of the Fed, right? There is no credibility. They don't know what the hell they're doing. They're taking it meeting by meeting. And now they're playing predictive that the market is going to slow down. So let's cut, or at least mention cut, ahead of the cuts. This is Jerome Powell essentially bringing the transitory into it. He's like, now it's transitory. So now we're just going to stick with the inflation that we have, because if we keep pushing on the economy, we're going to break it. And we can see that that's lining up. So instead of pushing on the economy and breaking the economy, let's get ahead of this and actually create some economic expansion here by starting to mention rate cuts. Then the market will get ahead of itself. And I think Powell expects this, where the market just starts to lift and lift and lift. And then when we actually start to see these economic slowdown, we don't look so bad because we're that much higher off the lows. So even if we do make a dramatic pullback, will we go through those October lows? I highly doubt it. And
well, couldn't you say inflation kind of is at 2% because the core PCE deflator 6-month annualized rate has fallen below the 2% target? And New Edge's Wealth's Ben Emmons wrote over the weekend, quote, "It took the Fed just 3 months of holding a restrictive rate in place since July, when the fund's rate reached 5.5% and Treasury yields and mortgages hit 15-year highs. The 6-month annualized PCE was cut in half."
Yeah. And that's all fine, but is it at 2%? And I would say that it's not at 2%. I would say that, yes, are we slightly above? Yeah, we're slightly above, right? If we think about it in this case, we're still showing a downward trend in the PCE, so that's a good sign. But the question is it down to the 2%? I think they definitely called the turn early instead of waiting for us to get past 2% and then making this mention, Nick, because if we were past 2% on CPI or PCE and we could actually see that, that's when you actually get inflation down far enough that it actually makes an improvement on where we were. We actually can take some price away. So where the pressure of inflation is not just what is given, right? But real inflation could even go down a little bit. This is what we actually needed. But the flip, and the funny part is, if you ask people out there, they're actually happy about this flip. I'm actually like, no, this is the wrong move, the complete wrong move. What you need to do is get the Fed balance sheet down and really put restriction on to actually create inflation to come down so that you don't create what's going to happen, at least that's what I see it happening, which is a new wage spiral inflation where everyone makes more money, but everything costs more also. It's a new normal in the inflation. And I don't know about you, but I don't see the new normal is going to help the middle class. Because
I don't think anything is helping anybody right now just because of how high inflation is.
No, the rich doesn't care, man. The rich just spend more, Nick. The rich just spend more. The higher class, when inflation goes to the moon, it really does put very minimal impact on their spending. Do they spend more? Yes, but they have the cash on the sidelines, right?
Well, they have the cash on the sidelines. Really, though, Mitch, I do know some pretty wealthy people, and I talk to them, and they're like, no, inflation really isn't helping me. It's hurting me because they want to move. And they says, I have all this cash on the sidelines, but it's not helping me in the long run. They want to see inflation down. I don't think inflation's helping anybody, especially with higher gas prices, higher food prices. Yes, President Biden is bringing things down to a certain level, but in the real run, the Fed, I think, is making things a little bit worse by raising interest rates as we headed through the pandemic. Yes, I get it, but they're not bringing inflation or interest rates down, in my opinion, anytime soon.
And the worst part is that by causing what the Jerome did by pivoting early, I think that this is just going to create even more inflation in the long run, because now that they start to cut rates, what will businesses look to do is to maximize on growth. And one of the easiest ways to maximize on growth is to continue to expand on the margins, right? Making more for what we spend. So let's cut on costs. Let's raise prices, cut on costs, raise prices, cut on costs. That's what businesses has been doing here. And that's going to cause a new norm. What does that cause? That causes the consumer to either do two things: either break to the point where the consumer just doesn't have the money, or the opposite effect happens where the consumer just goes searching for money. And I feel like that's what everybody's doing this year. At least I've heard it. Everyone just wants to get the raise, right? I mean, everyone wants to get the raise. It's
or
not
they're looking for a new job, higher paying job.
The guy at McDonald's is looking for it. Or correct, 1000%, Nick, is that they'll just find a new job, right? They'll find the job that can pay them enough to get over the inflation hurdle, right? But this hurdle is not one that you want to keep jumping over, because it can create a real nasty spiral where prices never come back down. And the new norm, Nick, ends up being $700,000 houses. How do you feel about that?
I don't have that kind of money.
The truth is Nick, the middle class doesn't have that. The middle class.
No, they don't. I can tell you from my standpoint, where I live in the communities around me, there's not one person that I know that has 700,000 and ready to go to buy a new house.
Yeah, and the truth is that that's going to cause a nasty, nasty turn for the middle class. So either the middle class has to start making easily, and I'm calling it now, in the next 5 years, middle class will have to make probably near to $150,000 in the household for them to even stay afloat.
So what do you tell unions? Do you tell unions and maybe non-union companies that we need more money to pay more?
That's all you can do in this situation, right? When prices around you don't go down, the only thing you can do is ask for more. And it doesn't stop here, right? It doesn't stop at the first call. Next year, Nick, you think prices are going to go down? No, prices are going to go up, especially if the Powell does the rate cuts. If Powell does rate cuts, housing will go up in price. If Powell does rate cuts, guess what? Services will go up in price. Because people will be doing what? They'll expect that there's this like huge economic like influx coming. So they're going to raise prices even higher. This is just a death spiral that we're running on. This is why I think that if Powell would have just stuck to his bones, which the Fed usually does, right? It usually plays the extreme game. They played extreme waiting for the rate cuts. They played extreme on the amount of rate cuts and the speed of those rate cuts. But now they're not playing the extreme on holding the rates this long. So I think what ends up happening here is a little bit of a backtrack by Powell in the next meeting, where he says, well, hold on, guys. I know that you guys are expecting now rate cuts, and I didn't say all that now. So this is what I expect to see what happens. And the Fed loves to do this, where they tell you one thing and then they go and do something else. This is what I've come down to. It's not listening to the Fed of what they're going to do anymore, because they're losing surely credibility. At least that's what I feel.
But Mitch, to your point, I'm sorry, but the people that are living in Alabama, Georgia, Idaho, Indiana, Iowa, Kansas, Kentucky, Louisiana that are making $7.25. I'm sorry, the minimum wage in this country as of right now, there's no way it should be $7 or $7.25. People cannot live off that. I'm sorry, I have to say it because nobody else is. But even the people making 14 in Illinois or 13, I'm sorry, minimum wage cannot be that low because people cannot sustain that. Even if you work at a McDonald's paying 16, 17 an hour to support a family, to maybe buying a house, or maybe just getting basic cable, internet, a refrigerator, washer, dryer, $7.25, whatever you want to call it, isn't going to cut it.
You're not wrong there, man. And the truth is that this is the problem that is created by also the debt that we're in as a country. And the debt that we're in as a country is causing this problem where we don't make stuff, we don't create stuff. So our stuff usually isn't the best high margin, anything that we actually make here. And so this is causing the issues. And the truth is that minimum wage was never meant to be a living wage. I agree with what MD is saying here.
I agree with that, but then you have to give a little bit more to hardworking employees. It seems that in this day,
that's the problem, where there's a separation here, right? So yes, we can give the lower, let's say the lower class there, where they're running on minimum amount of money, and that can get boosted up. But everyone else needs that same kind of boost for you to keep going. This is where the problem comes. You can boost the little guy 20%, but can you boost the guy's wage that's near $100,000 20%? And then can you boost the guy's wage that's at $200,000 20%? Then a little bit higher, the high income makers, right? Over $250,000 a year. Can you boost them 20%? Because they're going to want the same percentage gain. Yes. And the truth is this creates a wage spiral, where inflation now will not come from just on prices that we see out there, but because people are making more money, they will go ahead and charge more. Because it's as simple as this, right? If your expenses and you're a business, right, Nick, and you and I are running a company right now, right? We're running a company right now. It costs us $1 million to pay our employees, right? Well, guess what? Next year, it's going to cost us $1.4 million to pay these employees. What do we need to do? We need to try to either
get some more income. We got to have something.
We need to either make more money, or we got to cut employees and try to run with 3 wheels. This is what people have been trying to do. You've seen it, Nick. I'm sure you've seen it. I'm sure you go out to restaurants. I'm sure you go out to stores, and you see like 3 people in the store when normally there would be like 7. Everyone's trying to run on 3 wheels.
I see it every day. But you know who's hiring, Mitch? It's the Targets, the Walmart. It's the big companies that can sustain it. The little companies can't. Like the Denny's near me, I'm sorry, they can't sustain it. The Burger King, the McDonald's, they can't sustain it just because of the revenue. And especially if you have poor management and bad business skills, and you kind of can throw it out the wall. But then there's an Italian restaurant that they've had the same amount of employees for years. They're growing in revenue and by size, but they're not growing in revenue and size by employees, if you know what I mean. I mean, the employees, I remember going there as a little kid. I'm only 17, about to turn 18. But 6 years ago, I remember the same people, and it's still the same owners. And we always say, you're not going to hire any more people. Oh, no, we have the perfect family staff restaurant. They don't want to do more because they don't want to, I don't want to say that I want to pay more, but they don't want to run the risk of not getting enough business. I mean, the restaurant's always packed because it's a great Italian place, homemade food. But in general, there's people that have to work 3 or 4 jobs, and I don't think that is correct. I don't think that's right that they should have to work 3 or 4 jobs to make enough money to support one family.
So then you need to call Jerome Powell and tell him he needs to change his tune, Nick, because if they need to stay restrictive enough to cut the inflation down and actually get it to 2%, and he gave up. He said, you know what? I see 2% in when? 2025. What does that tell us? He gave up. He gave up. The pressure on him is too high, probably political. Let's be honest. Probably political because it's coming towards that time of year.
Yes.
And he changed tunes. I thought he would save his ammo because that's what normally the Fed likes to do, is save ammo and be ready to kind of bring in the conversation when needed. But he got ahead of it. The only thing that I can think of, he saw a really nasty slowdown in Q1 and said, can I get ahead of it and actually front run it by mentioning the cuts, not even doing a cut? And then if we do go into that weakness, if I do a cut, will that cause that recession that some people see out there to just go away? And I think that he sees that he can do this. He can put like the market on this exuberant run. Then when the market starts to actually see the slowdown because everyone's really getting exuberant to the upside, and then all of a sudden the numbers just change from one report to the next, then he can come out and say, you know what? We're going to create a supportive environment here. We're seeing the slowdown. We're going to go ahead and actually do the cut. That's what saves the economy in 20.
Well, here's the thing, Mitch, to that point as well. I'm sorry, but for the companies that are making millions and they know that they're never going to fall short of revenue. I mean, I could name companies at my dad's place, but I'm not going to do that just because I'll be respectful. I'm sorry, but for union workers, there's no reason why they can't budge. And why is health insurance going to go up if your pay is going to go up? Literally, that's breaking even right there. So right there, you can scratch off the pay raise. But I'm sorry, but for the companies that are making tons of millions and billions of dollars each year, and they know that there's not going to be a slowdown in production, in meat production, there is no reason why there should not be a pay raise. I'm sorry, but health insurance should not be going up. Pay raises are the only ones that should be going up in this environment. And it's the greedy corporations, especially China. The companies that are owned by China, they do not want to give. And it is a problem that nobody wants to solve. And then whenever the representative says, this is the best deal you got, you have to look at them straight in the face and say, I'm sorry, sir, no, this isn't the best deal. If you work out the calculations.
That's the truth. And the long run is that China is playing a game with us. I think that we're in for a little bit of an awakening in 2024. I think that people see this economy as being a positive situation, when really what it's causing is a test of strength to the consumer's wallet. And it has survived. That consumer's wallet has been one of the strongest things that we've ever seen. And a lot of this, why? Because we had a moment of savings during the pandemic when it should have been the opposite. It should have been a lot of spending. But
and especially for all the healthcare workers, Mitch, that have gone to work throughout the pandemic to keep this economy running, and they get 0% raise or any bonuses. It is ridiculous. My dad worked all through the pandemic because he is in a meat packing industry. He does the meat, ships tons of meat to the McDonald's, to the Burger Kings, to the Wendy's. He has worn a mask day one and has not taken it off. And they just got a contract a few weeks ago.
Yeah.
Really wasn't a raise because health insurance went up. But in general, all these companies that have made and have had workers through the pandemic that are now suffering because they can't get anybody, they need better working conditions, they need better pay, and they need to not be greedy.
I agree. I am seeing the IWM go red here. Be careful with the smaller names. I do see a lot of those turning around, guys. So just be careful out there, team. A lot of those kind of smaller names taking a hit today. So we'll see what happens, but it's not looking good out there, team. So I see a lot of names pulling back that were strong yesterday. So definitely
Bitcoin,
seeing a little bit of a pullback on the day.
Right there, Mitch. Bitcoin, that's topping the trends. Bitcoin 2023 rally drove some of the most biggest gains this year. But I mean, can that be sustained through next year? I mean, we're seeing this Bitcoin stuff. I don't think Bitcoin's going to 100, 200, 300,000. There's some people that think that it's going to 1 million. I don't see Bitcoin in the long run being a good asset to own or being a good crypto to own just because how volatile it is. It's open 24/7. I kind of think throwing crypto out the door or out of your portfolio is probably the best decision.
Yeah, I'll tell you, there's one stock that has moved far enough for me to really say that there's no way in hell it should be at this price, and that is ANF. There is no way in hell that this stock should be at $92. Not even in hell should it be at $92, bro. And I'll tell you right now, this is going to be one that I'm going to look back like I saw Beyond Meat. There's very rare times that I feel like something is like beyond its pricing. This is one of them.
You mean beyond broke? You mean Beyond Meat mean beyond broke because of that stock? I mean, look, 876 it was March 2023, 1714, and now it's at, well, down 29% this year.
Last year?
Abercrombie and Fitch, you know, it's a pretty decent company overall. They have pretty good earnings results, I think.
Mm-hmm.
You don't think 92 justifies it? Or 91.15 now? You don't think that justifies it?
No, and I'm going to actually try to start opening up a little bit of a bigger swing trade on this, actually. Of course, full disclosure, you guys choose your own levels here. My idea is that this maybe could go back to like 95. I don't see this at 100. So I'm going to even just start to get a short here. But there's still this kind of bounce pattern that it could do one more ride up towards like 95. So got to keep that in mind if I do start to get a starter here. But I'm going to just do 50 shares just to start. And I'm going to continue to watch this, right? I got to tell you guys the story, right? Because this reminds me of Burlington back when I went after it in a very similar situation. So I'll give you guys the example here, right? Let me pull this to the side so you guys can see the chart. Okay, so you guys see Burlington here, right? Look at what happened here, right? So I'm going to rewind towards late 22 going into 23, right? And what happened with Burlington? Out of nowhere in November, makes sense, right? Retail stocks start to make a move in November. Same trend that we saw this year, same trend that I was looking for. Well, boom, Burlington started ripping to the moon. I was like, what the is going on? No one's going to Burlington, dude. like there's no way for this stock to be up here. Then it got up there towards like the 240s. And I was like, dude, I just got to wait for this trend to change. This is going to change at one point. Then it happened on this day where they came out with earnings and I shorted it before on this day. And it actually goes up off the earnings that were bad earnings. I was like, damn it. Why is this stock going up? Why is this stock going up? These earnings are horrible. Like I called it right. The stock is extended. The RSI was already starting to turn, right? You guys know I look at historical RSI. Look how the historical RSI topped out right around here, right around this 86. And where was the price action? Where was that 86? It was right here. So I saw all that RSI going down and I was like, RSI going down, price action going up, negative divergence, that should shift at some point and come back in the line. So I thought I was dead right on this one. And I was, but I didn't get through that earnings report. And next thing you know, throughout the whole year, look what happened. To June, this thing came all the way back down. It bounced for a little bit in June, went up there in August, and look where it ended up coming back down. All the way back down to that November pricing. So where I watched it go from, it came back all the way back down. That's the way I feel ANF will be next year. We think this is going to be like this monster story. It gets up to a new all-time high. This thing is literally, even in the height of the prep days, this is not at those pricing, Nick. I don't know what to think of, but I think this is going to be one of my major calls for next year. And I'm going to start it already. So you guys see, I just went 50 shares. I'm going to keep building this position, but I think eventually this breaks the 9 EMA, which it hasn't wanted to break for a long time. Goes to that yellow line first, which is 75. And then we can get maybe a little bit of a bounce. Then eventually gets to the 200 exponential, which is 55. We're talking 40 points down, guys. I don't think Abercrombie & Fitch is a $100 stock. And if you guys think that, let me know in the chat. But I'd honestly have to say, go to an Abercrombie & Fitch, show me the traffic, and show me that these guys are getting this type of move. It's just exuberance in the market, man. All right, we'll see what happens.
Abercrombie & Fitch, I'll tell you that. I don't even think I have one near me.
Yeah, and Nick, I was in the mall the other day, and I didn't go through. I didn't see an Abercrombie. I saw an American Eagle.
But I do have one, about 40 minutes away from me.
That thing was empty. There was no one in it. There was no one in it. There was no one in it. How the hell is it getting this type of price move?
Go to New York. There'll be tons of people in there.
I don't know, man. And it's not that I don't judge. It's not that I don't think that ANF is like a good brand. It is. But it also isn't like, let's say, the new Nike. Like, you know what I mean? I don't know, man. I would continue to watch these stocks. If I look at retail, because that's what I do a lot of the time, is that I'll look at sectors and industries, right? And if I look at this industry and I put it up by RSI and I start to look at what is just out of this world strong, there's some stocks here that just make no sense. Here's another one here, BKE. Do you know this one?
No.
This is Buckle. Buckle is also a closing line. And to tell you the truth, I mean, look at this. We're going to go to a 10-year trend here. We're going to go back. Look at this thing. This thing made a ride up like that in 2022, very similar to Burlington. Then what happened? January came, and boom, it came all the way back down. I don't know, man. What do you guys think? You guys think Buckle is going to be that type of stock to the moon? Look at Lulu. Look at the expansion move that Lulu has done. Lulu is definitely at an amazing move.
Lulus are packed near me, Mitch. I'll tell you, people are spending there.
Yeah. The question is it a $500 stock? It just came from 380 to 506, Nick. That increases a good amount there on market capitalization, right? I mean, I would think so with that type of move. So these are a lot of stocks that I see are starting to top out. The retail names were a run into Santa Claus rally. The Santa Claus rally has come. Now, will it be sell the news in these retail stocks? Something to think about. All right, guys, we went a little bit extra. Nick Brown and I just love talking markets. That's what we did here today. I'm sorry we didn't do too much trade talking, but hey, that's the way the market is sometimes. It kind of slowed up after that move on the Qs, right? We've come down here, but we're just battling, and we might make another down move. So this is where I start to get more even into that shorting retail type of move and thinking about that. So you guys see the Qs kind of struggling today. And with this being said, I'm going to go ahead and start a short on XRT also. We just made another attempt to go to 73s. So let's go ahead. Let's do a little bit of a starter position here. And then I'll be looking to add to this. Of course, you guys know I even rode up the XRT on the long side, and that was at 59. Now I feel like we're starting to top out on the XRT. We've made a move from 59 all the way up there to 73. Now I think this might come right back down.
Well, Mitch, I was going to say we have the 2-year. It's lower right now, lowest since May 17th, 4258. You have gold eyeing 2100 again. NASDAQ on pace for, I think, one of the best years or one of the best quarters since like 1999. I think NASDAQ 100 is up like 40 some percent. I think the NASDAQ is.
By the way, when you guys aren't on, there's nothing out there to watch like this, says Market Sniper. It's good to hear that, Market Sniper. That's one thing that I want to continue doing, and we're going to continue doing that. Nick and I are always going to be covering the markets, and we enjoy to just talk about stuff like this back and forth because you guys gain on the conversation. You guys can jump in with the conversation, and we need a News by Nick YouTube channel by Benzinga starring Nick. Either way, we just need a News by Nick Brown channel on YouTube and start to grow that. You know what, Nick? You know my number, man. You know to call me. I'll help you out. We'll get that rolling. We'll get you going on YouTube. You know how it is, man. We're going to have a great one. I hope you guys enjoyed the day, enjoyed some time. Like always, reach out to my man at News by Nick. Follow him on Twitter. The youngest, and I got to say, you have the most potential right now, Nick.
Well, thanks.
You have the most potential, man. And of course, potential is great to have, but we got to go and put it out there and make it success, right? Get that potential to talent to execution. I know that you're going to do that. I know that you'll do that right here on Benzinga. Anybody needs to reach out to my man, Nick Brown, I'll tell you what, reach out to him. He's always a great follow, always great, someone that I'm looking forward to seeing grow in the business. So have a good one, Nick. Enjoy it, and we'll see you back tomorrow, guys. We'll be back tomorrow, so don't worry about that. I'll see you guys bright and early, of course, on pre-market prep, but we'll also have live trading. That, of course, will start up at like 9:05, 9:10. So be here tomorrow, guys. Smash the like, and we'll keep it going like always right here, battling on with the holidays, and we'll see what we can come up with. And be careful out there. I heard that Joel likes to run on the Peloton sometimes, guys. Who has a Peloton out there? Who sees my man Joel out there rocking it? Are you guys having fun yet? We'll see you next time right here, guys. Smash the like. Enjoy it. Live trading with Benzinga. Like always, check out Trade the Pool. If you haven't done so, check the link right down in the description below.